Exploring the investment landscape with a guru's wisdom and a strategist's insight. Good Life Companies presents The Market Enthusiast with Noah Brooks and Chris Needs.
Welcome back to another installment, not just another installment, the 4th of July installment of The Market Enthusiast. Thank you so much for joining us today. You were going to wear something patriotic.
Yeah, well, you're criticizing me saying my shirt's not red enough. But
Well,
there's some red
when
on
you
there.
said you were going to wear something patriotic, I was like, I looked through my closet this morning and I had, I don't know, something from, it looked like I was at a tennis match. It didn't seem patriotic. It seemed really, I don't know, really stuck up. And I was like, I don't think I should wear that. I just figured I'd do my regular white shirt.
There you go.
Yeah. Well, next year
Next year.
we'll do like, but you're not supposed to do the American flag, right? Everybody, it's supposed to be, if I remember from social studies in 5th grade, you're not supposed to have anything the American flag wise except the flag itself.
My understanding is it goes against convention if it's actually made from a flag rather than clothes designed as a flag.
Okay.
That's just what I go with because I wear flag stuff sometimes.
Are you a big 4th of July guy?
Of course. Who isn't?
What do you do for 4th of July? Are you a big fireworks guy?
Fireworks, golf, barbecues, parties.
Yeah, barbecues. Is golf a 4th of July thing? I don't know.
For me, it is.
I'm not sure that our founding fathers were golfing on 4th of July.
Probably not.
Even after the founding of our nation. All right. Well, welcome anyway. Thank you so much for joining us today. It is the 4th of July edition, 4th of July this week. And we just finished the first half of the year. You know, I'm telling you, everybody is unsatisfied. Everybody's waiting for the market to tank. But here we are, S&P 500 up 15%. And people don't like it. And I just cannot figure it out why everybody's anti-market at the moment.
Because it's top heavy, I guess.
Yeah.
It's a lot of the large caps doing well. S&P 500, NASDAQ 100 doing very well. Dow even hit all-time new high. But besides that, smalls and mids aren't really working. Bonds not really working.
Mm-mm. Collecting a coupon, but overall not working so much. Year to date, what did you say on mid caps? Up about 5. Small caps, depending on what you're looking at, Russell 2000 or S&P 600. S&P 600 actually down for the year. Russell 2000 up about 1%. But that's a pretty big delta or difference between flat and the S&P being up 15.
Yeah, so that I had small caps down 1% year to date and S&P 500 up 15%. That is the largest outperformance of large versus small back to 1998.
Wow.
So,
that's a long
time ago. Then you have
ago.
Growth versus value, also big disparity there. I think at the end of the quarter, it was 20.5% for Russell 1000 growth versus 6.5% for value.
Yeah. Are these value stocks ever going to come back?
I'm sure they'll have their time, but tech is running with it right now.
It's not that it's just value stocks. When you look at the different sectors out there, really technology has led the way. I don't want to say, for the last 10 years, but the 10-year return on tech is great. Mm-hmm. COVID killed some real estate. COVID killed some industrials, with the exception of a few individual companies. But when you look at the names, not so great. But technology has just been on fire. During COVID, it was the profitless tech like the Zooms. And then after that, it was the Apples, Amazons, Googles, obviously NVIDIAs of the world.
This is despite all the regulatory scrutiny they're under too. You see, it seems like every week the EU is fining or investigating one of our mega cap tech stocks for something.
Yeah.
Doesn't end.
Well, antitrust violations are significant, right? And when you hear about companies that are conspiring with other companies to keep prices high, or as these larger companies are acquiring smaller competitors and then raising prices or limiting access for consumers to other services, I think that I don't think that's great. Right. I don't think that's great. I think capitalism has grown on competition. The EU guys have a much easier time pointing it out and then fining them and telling them they can't do it.
Especially because all of their tech companies aren't on the scale of ours. They really don't have a major tech competitor to our guys.
Not at the moment. I'm sure it'll come at some point. We hadn't talked about this, but do you think that's an innovation situation? Do you think it's just we had a head start on technology? I mean,
I'm sure they'd have a lighter touch with companies founded in the EU, whether they'd admit it or not. But I mean, if you're a tech innovator and you understand the regulatory environment there, there's an arbitrage to be had by just moving your headquarters over to the US.
yeah. I don't know how many companies have done that. I know some have certainly have listed on exchanges here in the United States, but I don't know about moving headquarters.
Yeah, they'll just found here.
Yeah.
They won't even start over there and bring it over. They'll just come right here.
That's kind of nutty. So first half of the year, big news. Obviously, everybody's talking about inflation. It seems like inflation is really cooling off. Now, we had some information last week. Personal consumption expenditures, what the Federal Reserve says is their preferred gauge of inflation, under 3, coming in at 2.6. That seems to be good. And, we're a few market days beyond that data point. And if we close today where we are right at the moment, the S&P would be closing at an all-time high, just shy, when we came in here, just shy of 5,500.
Yeah. PCE was in line 2.6 on both headline and core. That core is at the lowest level since March of 2021, sort of before this whole thing blew up on us. So it's nice to return those levels, certainly.
We always talk about the difference between inflation coming down, disinflation, and actual deflation. And so I've looked at a fair number of commodities before we came in here. And one of the stats that I've seen today, and certainly it's not just today, but one of the stats that I've seen is used car prices. So the CPI for used car prices is actually negative, and it's been negative for over a year. So it's one of the few things where you actually see the consumer price coming down. But I did pull some other stuff. Some of the things that went crazy during COVID, we remember lumber. A 2x4 used to be $1.50, or the prime was maybe like $1.88 at Home Depot, and they were up to $10. So lumber contracts were over $2,000 a share back in 2021. Today they're under $500, almost under $450 a contract. I mean, that's great for the builders. Corn is at 4 years lows today. Wheat back in 2022 was up to $1,300 a contract. Now we're sitting under $600. I mentioned the used car prices. We know Brent crude, when Russia invaded Ukraine, it was upwards of 140. Mm-hmm. West Texas Intermediate was upwards of 130, both in mid 80s today, 83 and 86 respectively. I mean, if nothing changes, right? I mean, and this is a big if, but if those commodities don't start to go back up, or even if they go up a little bit and don't return to their highs or near their highs, I feel like we're set up for inflation under 3% and maybe getting close to the Federal Reserve's target of 2%.
I definitely agree. And, the Fed isn't, I think they're not trying to run a lap, waving a flag saying they beat inflation now that PCE is at 2.6 and CPI is at a good number 2. What was CPI? 3.3, I think, on headline. Because the last time they sort of ran that victory lap, people just came out and started blowing the market back up, blowing prices back up. So I think they're tentative to say they beat it because it'll change expectations and make people think cuts are coming quicker. So I think otherwise they would say something more to that style, but they learned their lesson a little bit in December.
I mean, the fact of the matter, though, is that cuts are coming. We had a long conversation about it last week. We don't know how many cuts, but the market is priced in, 100 to 150 basis points in cuts. Obviously, there's an election coming up, and I don't think anybody really thinks they're going to cut before the election, although it's possible. I don't know that I'd put high probability on it.
The market does have odds for a September cut, but how many times has, the CME Fed Watch, which is market expectations, been completely wrong over the last 2 years?
I mean, a lot.
Yeah.
Absolutely a lot. I'm not saying that it couldn't happen before the election. It's just the closer you get to the election, the less likely it is.
Yeah.
I think they definitely want to be apolitical, although they keep telling us that they're data dependent, right? So we come into July, we get a reasonable CPI number. If it goes, I think if you go out a decimal, it was 3.26.
Oh, there we go.
Right.
That's the detail.
So,
we wanted.
You get a 3.1 or something like that. I mean, because they have to cut before we get down there. Otherwise,
you'll overshoot.
You'll overshoot. You'll keep it tight for too long.
Yeah. I'm not saying they're taking their eye off the ball, but Powell had comments this morning talking about how they're very focused now on the labor market and keeping an eye there. So we did have the JOLTS report come out, which was
job opening labor turnover survey.
Yes. And it was a little bit hotter than expected, not majorly. Expectation was for 7.9 million jobs, and it was at, I think it was 8.14 million jobs. So a few more jobs out there than expected, but
right. So job openings.
Yeah.
I haven't heard, and maybe it's just the crowd that I run around with these days, but I haven't heard anybody say lately that they couldn't get a job.
Mm-hmm.
I mean, there's 8 million job openings. Obviously, some of those job openings are jobs that people don't want to do. But I don't. Have you heard anybody say, "Oh my God, I can't find a job"?
No, I mean that's all we heard right after everything went haywire after COVID was we can't get enough people. But haven't seen much of that lately.
And we have unemployment numbers about 240,000, and if it's under, well, conventional wisdom is if it's under 400,000, that you're going to have wage inflation, right? And what did you say earlier about the 5%?
Yeah, I mean, historically, you'll just look at a line in the sand. Generally below 5% unemployment, you'll see wage inflation. Now, things have been different for the past several years, but we're still well below 5% at 4% flat on unemployment.
Yeah. So all in all, I mean, the economy looks good. It feels good. I know that not everybody, it doesn't look and feel good, but to a large majority of the population, we've been able to, kind of roll with the punches. Inflation has certainly affected people's discretionary spending to some degree. But the fact of the matter is that personal disposable income is the highest that it's ever been since COVID.
Mm-hmm.
When you look at it on aggregate. And wage inflation has actually helped the U.S. wage earner, and we've had wages accelerate faster than inflation.
Yeah, and they're holding more stable as CPI and PCE are down at the 3.3 and 2.6 levels. I think I saw last week it's at still 4.1% annualized on wages, so yeah. It's a good number. One other thing we're seeing that will contribute towards CPI, maybe catching up to PCE a little bit, is housing. We're starting to see a lot of houses finally come on the market and be available, for sale. So right now, year over year, active listings are up 16% year over year. That's the highest in 2 years. Obviously, we've been in a tough spot between prices and rates, but they're finally coming back on the market. We have the number of U.S. mortgages, homes without a mortgage is actually at a very, very high level. So 39% of people in the U.S. don't have a mortgage.
Wow.
So
do you have a mortgage?
I do.
I do too.
Unfortunately.
Now, do you think that, did you say 38, 39%?
39, yeah.
Do you think that those are all retired people or?
Most are, yeah. Most are probably boomers.
Boomers, okay. Because the reality is it's tough for a regular person to own a home without a mortgage unless they were given it by their parents and, which is great. I know people that's happened to, but the reality is people get mortgages.
And the people who make a boatload of money and could get by without a mortgage, they'll just buy a more expensive home anyway and get the mortgage. So.
Yeah, absolutely. So one of the other things that we look at is, disposable income. and people what they're doing with their money. And we see a lot of people traveling, right? I was going to bring this up earlier. We're talking about fireworks, but when we were little kids, we would do this exodus down to Florida to visit my grandmother. So down I-95. And one of the things that I always remember about this drive with my parents was you would see these signs on I-95 for south of the border. South of the border, 278 miles. And then, 20 miles later, you'd see it 258 miles. And it was always for Pedro. And at some point in my life, I think with my wife, we made that exodus driving. I'm going to do that drive anymore. But we made that drive down to Florida, and we stopped there. Have you ever been there?
Yeah.
Yeah. It is I think the technical term is a crap hole. It is the worst. But I don't know where they got all the money for the signage, but the signs are great.
Yeah.
Yeah.
I think most people who are on the East Coast here are sort of aware of it, through travels and whatnot.
Yeah.
So
yeah.
they've done a good job of marketing.
Absolutely. No internet needed, right? I don't make that drive down to Florida or south of the border anymore, but I did drive for fireworks last week. So my neighbor Bo, he does a fireworks show every year, and we've seen it. We've been invited to it. But last year we went and it was awesome. And it's my neighbor in the cul-de-sac, and he spends a fair amount of money. This year he's actually got an app that's going to light them all off. And I said, I thought
save some fingers.
Yeah, save some fingers. I thought to myself, this guy's putting a lot of money out there, and it's for the neighborhood. I'm going to go and get some fireworks. So I made the trek. Here in Pennsylvania, fireworks are, I guess, legal, right? Well, not I guess. I mean, they are.
Not the good ones.
Well, the good ones are.
Yeah.
Yeah. So I went to Easton, which is right on the border of, as Pennsylvania, New Jersey. And there's all these fireworks stores, and you have to go in and give your ID. And I picked up a few $100s worth of fireworks to help this guy out, and I brought him back. When I was younger, I messed around with fireworks, but I always felt like I was a novice. I mean, it was cool and we had fun, but this guy's actually going to do it electronically with the app, and I think that's great. Are you a fireworks guy?
Yeah, Alexa's family, they do fireworks every year, and we go to our local fireworks in town and whatnot. So I'm a big fan.
Yeah,
Nolan's a big fan too.
Yeah, little guy. How could you have a little boy that wouldn't like him, right?
We had a guy in Orgsburg the other day at like 7:00, totally daylight out. And they went from like 7 to 10:30, just constant fireworks. I'm thinking, what did they drop? Like $100,000 on this? Like,
that's an expensive. The fireworks that I bought, they were not cheap.
Yeah.
I mean, a few $100 does not equate to a lot of fireworks.
Yeah.
Absolutely not. So we're talking 4th of July. We're talking fireworks. We're talking travel, right? People are traveling. AAA is estimated that it's 52.5 million people are going to travel more than 50 miles away for the holiday. And what we've seen over the last month or so is on the 27th and 28th, which was essentially, was that last weekend? Something like that, I'm pretty sure. 2.92 and 2.93 million TSA travelers every day. So we are well above 2023. We're well above 2019. And, people just want to get out. And you had a stat that you shared with me earlier.
Yeah, Americans are traveling internationally, specifically to Europe. Travel is up 8% year over year. So it's kind of a boost right now to the southern European economies right now. All the Americans are going over there, blowing money on their vacations.
Yeah, I'm down with that. I'm ready. Last year we stopped in 2020. We didn't go anywhere in 21. We didn't go anywhere in 22. It took us till October of 23 or November of 23 to actually get out of the country, to go back to Europe. I mean, I'm ready to go back though.
Yeah.
Absolutely.
It's getting the itch.
So we have some other things to talk about. You and I were talking sports earlier. We have some big contracts coming up. I'm not a sports guy per se, but we have the Olympics coming up. The Olympic trials are going on right now. The Olympics are coming over to Paris.
Just a segue on that, Nike They just got killed on their last earnings report. You'd think they'd be getting a boost right before the Olympics because that swoosh is going to be plastered everywhere. Everyone's going to be wearing it. They're down 56% from their all-time high in November of 2021.
Wow.
Had a rough go of it, and there was a real scathing analyst note that basically said the current management team is incompetent or too inexperienced and doesn't have the skill of the former team.
Well, didn't you tell us that you were buying your shoes on Temu for like $9 or something? You said that.
Literally a steal. That's how I look at it.
Olympics are coming up in Paris. I don't know anybody that's traveling over there per se, but we're spending a lot of time watching the Olympic trials on television. Is that something you do?
I definitely do. Yeah, I'm looking forward to the basketball. That's my favorite thing to watch, and the track and field, the sprinting. I like the sprinters.
Oh yeah,
swimming. Sometimes you can get excited over. Apparently, we have an amazing swimming team. We're pretty awesome every year, but we've got a squad.
We watched gymnastics last night and last 2 nights actually, and a bunch of our women's crew gymnasts have hurt themselves. So we have some more senior gymnasts that are coming back into the fold. And I'll tell you what, for 26, 27 years old,
Simone Biles.
Yeah, right.
Yeah,
she kills
She's
it.
amazing.
I it's hard to imagine. I look over at Eilish every once in a while and I go, I could probably do about 70% of the stuff that they're doing. And she just starts laughing at me.
I would have laughed at you too.
I always think like, I could probably do that. You don't think that when you see it?
No.
You don't? Okay. I don't know.
They do like triple flips, somersault twists. I'm just like,
yeah,
how?
but like if you gave me like a week or two, no, they go, probably not. Probably not. So we have an election coming up. We have a Federal Reserve that are they dying to lower interest rates?
I think they want to. I don't think they're dying to. Like I said, they haven't taken that quote unquote victory lap on where inflation's at, but it seems like they're shifting their focus a little bit over to the jobs market. And now they're maybe looking at two things rather than purely focusing on inflation.
So, but what I'm hearing there is they want to see jobs decrease. I mean, we know that their mandate is full employment and price stability, right? Which is code for low inflation. Are we going to need to see jobs numbers come in negative?
I don't think they'll have to go negative, but I think they would like to see some low triple, maybe 150 down to 75 would be their sweet spot for things to stabilize.
I think they want to see negative.
That'll be tough.
That would not be great. I mean, the first time we get a negative print in the jobs numbers, I think it'll really solidify people to say, okay, that this was the top.
Mm-hmm.
And we keep thinking, depending on who you talk to, depending on the analysts that you listen to, I said earlier, if we close right now, we're going to be at 5,500 or just a few points shy of that on the S&P 500. And it seems like every time we get a new high, which we've had many of them this year, maybe 31 or so, you have the bears come out pounding, say, that was it. That's the end. And then we consolidate for a few days and then move higher.
Yeah.
It's just, it's one of these things where the market climbs the wall of worry.
Yes.
There's nothing really out there that's negative. I mean, we know inflation is coming down, so that's a positive. Jobs are still being created. That's a positive. There's a lot of unknowns, but we don't have any really negative data. And it seems like the market is going to go higher. You had a stat earlier today that we were talking about where we were versus analysts, last year's expectations for the market.
Yeah. So at the midpoint of the year, S&P was at 5460, and that was above at the beginning of the year. Obviously, analysts always adjust their price targets up as the year goes on. But based on the beginning of the year price targets, 5460 exceeded all of the Wall Street analysts' price targets for end of the year.
Yeah.
Halfway through.
So here we are, we're, beginning of July, and we're already above every single price target.
Well, now they've moved them up So
Well, yeah, now they moved them up. We have kind of an informal price target thing that we do with the team here at Good Life.
Your price hasn't been eclipsed yet.
No,
Mine
I
has.
still. What was your number?
49.75.
Ooh.
Why are you trying to embarrass me here?
So we have some people that put the numbers up there. I definitely had the highest target for year end, right? So year end 24, my target was 5,900. We're getting closer to it. We're 400 points away, less than 10% away from that number. I think we could get there personally. I mean, it's certainly possible that we don't. But 400 points into 5,500, it's less than 10%. It's not like it would be that hard.
Yeah.
If we start to actually see some continued earnings growth in the first half of the year, earnings growth was upwards of 9% for the S&P 500. I mean, that's considerable.
Yeah.
Right. Other than the COVID rebound, I think that's the highest earnings growth that we've had in the last 4 years.
Mm-hmm.
I mean, so it's definitely possible that this market continues to climb higher. It's possible that the NVIDIAs of the world continue to climb higher, the Amazons, the Googles, the Microsofts. It would really be great to see, and I would feel, I don't know if the word is much better, but I'd feel solid if we start to see some expansion from small caps and mid caps.
Yeah, if we're in a healthy bull market, we would definitely see that. Not that we can't stay in a bull market if we don't get the breadth expansion, but S&P 500, over 35% of the index is in the top 10 holdings. Russell 1000 growth, 55% are in the top 10 holdings.
Top 10.
Yeah, it's a lot of concentration.
It is. But I mean, if it's working, right? So, I figured I would talk a little bit about diversification because people are saying that, to your point, these stats, they're really driving the market, and they are, and you should own them. But you should probably own, if you don't already, you should probably own other things as well. Mid caps, small caps, value, a little bit of international. It's asset allocation is how you invest when you don't know the future. So I think we talked about this a little bit last time, but back in the lost decade, 2000 to 2009, the S&P was really flat. But mid caps were up, small caps were up, international was up, emerging markets were up. And I'm not saying that I don't think that this is going to happen, but people are calling for, the end is near type of stuff. You have to own a little bit of everything and really be diversified. And as I always say on this program, don't bet against America. I'm sure there's going to be a time period where the market's down. The market was down in 2022. Who called for that? Well, hardly anybody, right? But here we are, new all-time highs, just shy of 5,500, and people seem to hate it. If everybody was saying, 6,000 on the S&P or, 45,000 on the Dow, and everybody was into it, I would be more concerned. But because everybody hates this rally, it actually feels okay to me. Yeah. All right. Well, here we are coming to the end of the show. Do you have anything for the good of the order, Chris?
Just one random stat.
Okay.
So it's not a round number, so pardon me, but the Hong Kong thing. So 27 years ago, Britain handed over Hong Kong to China with their agreement of two systems.
Yeah.
And that was sort of in place. Hong Kong was pretty independent until a little over 4 years ago now, when they had that national security law go in, and essentially China went in and took over Hong Kong, took away sort of their freedom, independence a little bit, changed the rule of law. Sort of in that time, over the last 5 years, the Hang Seng Index is down 36%.
Wow.
Interesting.
Yeah. Just like the lost decade here, and emerging markets doing significantly better, I'm sure there's going to be a time, or I expect that there's going to be a time where those markets do well. It just has not been in the last few years.
Yeah.
Right. I mean, everybody knows the American market. For us, the domestic market has certainly been the place to be. And it seems like, at least in the near future, it's still going to continue to be the place to be.
Yeah, one of the reasons why I think we came out of COVID so, I'm not going to say unscathed, but fairly better than the rest of the world, I think is because of our capital markets, how efficiently capital is applied, how sort of liberal our financial system is in terms of open and free. And most of the world doesn't have our quality
And gosh
of financial
darn it,
system.
because we're Americans,
Yes,
baby.
and because of that.
Right? Come on now. Hey, listen, everybody, happy 4th of July. I hope you had a great time, whether it's at the beach, watching fireworks, spending time with family. Please send your questions, comments, or thoughts into us at the Market Enthusiast at goodlifefa.com. Hope to hear from you soon. Happy 4th of July, everybody. We'll talk to you next time.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.